Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar had a rough Monday after staging a significant downturn, given the fact that the three challenges at 68.45 eventually was overthrown by the bears and now posts an engulfing candle to the family of the key reversal, which is a significant candle to support a bearish case. However, we'd still need confirmation to support this bearish candle, and if so, a break of 66.60.75 could give the next move down to 65.25, where the 60-day moving average is. Just like to highlight it here so you can see the level is significant. The market did confirm the bull move and has sustained the bull trend since the break, and then previously the rejection from that 60-day moving average sent the market lower, and it was a little bit mixed here, but eventually overthrown the challenge, and therefore the market did eventually move to a negative case. Looking ahead, we've got the RBA rate decision, and it is expected that the RBA will hike rates by 25 basis points, which would be another cash rate increase that would mark the 8th consecutive lift, taking rates from 2.85 to 3.10, a decade high. As I mentioned, all eyes on that level around 66.60 to confirm the outside range day, or the engulfing candle or key reversal. It has many names. Until then, the resistance will be seen at topside around 67.65 to 75. Looking at the euro, the weaker price action came through after Monday from a better than expected reading on the US services sector, which has added further concerns that the US Federal Reserve would prolong its aggressive policies to encounter inflation. In November, the ISM reading came in at 56.5, up from 54.4 in October and above expectations of 53.7. The US employment also was relatively firm. From that, with the both reports, has continued to see and also rattle the market, which has awoken uncertainty about the interest rates. The rate setting Federal Open Market Committee meets on the 13th of December, and therefore let's see what unfolds with an expected smaller increase of 50 basis points. The dollar-yen case also was relatively firm after rejecting the bottom side of the challenge, with the dollar firming up. Has now looked back towards the top side, which could see any rise towards 136.85 up to 138.50.90, where this downtrend and also congested area that may supply further indication to the bearish case and see a rejection. Nevertheless, supply is seen around that side, and let's see if the market can continue, but we would need a little bit more confirmation supported by these indicators to support the bearish case. Having reached the highs of around 5 months, the pound has finally found a bit of supply. It was getting overbought, but nevertheless the market, it does look like it could stage a small or further decline back towards the region of around 121.70, with a base seen around 121.30 and reassess. A very significant downturn from gold after rejecting the top area around 1,815 has also posted an key reversal, or a very strong engulfing candle, which waits confirmation. That confirmation is seen at 1,756 or around 55.56, and a break there would reinstate the downside back to 1,726, where the base was viewed. But like I mentioned, we do need to see a little bit more confirmation from both sides of the coin. That is a stronger dollar continuing its rebound, and also the fact that we need to see a break. Because in failing the break of 1,755, then we shouldn't take our eyes off the top side, which is somewhere around 1,788 to 90, as a retracement could be seen if we get a rejection and the dollar finally gives up its gains from last night. Wrapping up with oil, what we've got also another key reversal here, and therefore the market also awaits confirmation. If we see a break of 76.60, that would confirm this candle and reinstate the downside to 1.743060 and reassess. With any upside attempts, still looks around 80.40 to around 81.80.90. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the day.